is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Alex Chomp, the general partner of the Minerva Fund. The Minerva Fund is an active early-stage venture capital firm investing in women and traditionally underrepresented founders. Alex, thank you for joining us.
Oh, so very glad to be here. It's an honor. Thank you.
Great. And so where does this podcast find you today?
Right now I'm in California, and I'm enjoying a beautiful day. You know, one of those days you get in California before the real cold sets in. And in California, when we say cold, we mean, like 45 degrees cold.
Oh, that's good. It sounds like a great weather there for sure. So tell us more about your background. What did you do before the Minerva Fund?
Well, I've been active in investing for a number of years as an angel, as a deal lead. And, I was introduced to it many, many years ago. I had the opportunity in the late 1990s to serve as the director of technology for the world's largest venture capital firm. And so that was a very special time and place to be introduced. I really didn't know anything about investing. And I feel like I got an opportunity to watch real experts at work and maybe learn some things by observation.
Great. And so tell us more about running a venture capital fund. What's it like in today's market?
Well, in 2024, running a venture capital firm is, it's definitely changing. It's an evolving field. Venture capital as a business or a line of work in the United States is certainly less than 100 years old, probably less than 75 years old. Its modern form, it's, probably only 20 or 30 years old. And so there's a lot of room for such an important and growing field to evolve. And one of the things that we see is this decomposition of a larger industry, which is, it's in alignment with one of our principal theses around decomposition. We see that the technology platforms of today are really allowing emerging managers to come forward much earlier. And if properly leveraged, can be, a great way for what would you call it? Like that 1,000 flowers that bloom in the desert after the rain, right? There's an opportunity here, I think, for more and more people to become involved with venture capital, either as investors or emerging managers.
Seems like it's going down and out. More people are getting involved, more applications are being brought into it, and more funding is getting to more investors and more startups out there. What do you see in that direction?
Private equity as a class is very interesting, right? So if you think about where does venture capital exist in context, right? Venture capital is part of private equity markets, part of private equity as opposed to public equity, right? There is a subsection of private equity called private equity, which is its own thing. But private equity more general is non-public equities, right? And so when you think about it in that way, then you understand that venture capital exists at the very, very front edge of the value creation wave that's existing in private capital. And one of the things that people don't necessarily understand or think about too deeply is that there are probably something like 40% less publicly traded companies in the United States today than there were 20 or 30 years ago. And that means that the field of available candidates has shrunk. But nobody would argue that in the same period, the American economy has shrunk. That's clearly not occurred. So where must most of that value be if it's not in the public equities, right? Logically, it has to be residing over in the private side. And particularly for early stage investors or smaller investors or non-institutional investors, the place to be in that value creation life cycle, if possible, is as close to the front as possible. Because the front of the life cycle is where your money goes the furthest. The risks are the highest, so you need to practice hygienic portfolio practices like diversification. But in any case, the funding cycle is a little bit tougher for emerging managers in the last couple of years. The venture capital dry powder keeps kind of piling up. So there's a lot of capacity available to deploy. There may be not as many channels to deploy it down. And this is where I think, again, technology is playing a role. It's offering capital more opportunities to get to market in an early and important and exciting part of the market, which is early in the value creation life cycle of what is clearly the majority of the economy.
You think that dry powder is going to find its way into very, very early stage companies, or do you think people will want to just drop it into much later stage where a lot of the risk is out of it? It's going to be a winner at some level. This will be easy to do. Where do you think it's going to go?
Well, it's an ecosystem, right? Different, and just like any ecosystem, it exists along a continuum. And a certain percentage of the available, there's always a percentage of the money that wants to get to the earliest point in the value cycle. And there's always, the bulk of the money is looking for less risky opportunities.
Very good. So tell us more about your investment thesis of the Minerva Fund and how did you come to it?
Well, we have a thesis that we've developed at Evolution over many years. It comes from my work in the Valley, in the 90s, and has matured over the years since then. And it's got a few pieces to it, but it's pretty foundational. And I'll offer that it's just a thesis. So it's important to understand what a thesis is and why you have one so that you can depart from it when you want to, right? You got to understand what the perfect choice is or what you're ideally looking for, and then recognize that you operate in the real world. And in the real world, you make compromises. But what I especially enjoy looking for is places where technology is decomposing monolithic industries. So I like decomposition plays, a term that you'll often hear in the field is disruption. That's not really what I'm looking for. Disruption is fine, but I'm specifically looking for decomposition. So show me a company that's sliding up alongside a monolithic industry like banking and decomposing it with techniques like automation and specialization, because I already know there's plenty of market capacity in banking. So to the degree that you can pull some of that market capacity off into a startup in the form of revenue, then you create the possibility for me as an investor of an exit, right? Exits are often very, very, very closely correlated to revenue. Revenue is correlated to market. And some VCs prefer to go out in search of market changers, market creators, market beaters. I prefer to sidle up alongside large markets and pull off value with specialization and automation and support the entrepreneurs that are doing that, because I find that creates a wealth of opportunities for exits. So that's one of the first planks in our thesis. The next plank in our thesis is that we prefer innovation over invention. Now, again, this can be somewhat different from some of our colleagues who are specifically looking for invention, who highly prize invention. We find invention generally is fairly expensive and is not always commercially translatable in a timely way, right? There's an old saying in investment, which is that being too early is indistinguishable from being wrong. So what we're looking for, again, is we're looking for entrepreneurs, generally speaking, who are using existing technologies to find and build solutions to customer need so that they can create revenue. And in creating revenue, open up the, avenues of possibility, whether it's to funding, to exit. But, a revenue like a coat of paint hides a multitude of sins.
No, that's very good. No, that's a great investment thesis. And how did you come to it? Did you do the traditional research into the market trends, or did you have experience in a previous position, or what led you to that in thesis?
Well, that's a really good question. It comes from grinding my face off, right? Most of my lessons in life come from mistakes that I've made. And I've been lucky enough that over the years, I've had great partners and employers and teachers and mentors that have helped to finance that learning, helped to finance those mistakes. And what I've tried to do is remember what there was to learn from those mistakes and bring it forward and hopefully pass it along, right? Hopefully it goes beyond me, right? It goes into the people who are interested in this topic and are looking for lessons that were learned by somebody else so that they don't have to learn them themselves. So this is why, for example, I prefer innovation over invention. Another element of my personal investing thesis is I prefer CEOs who run to revenue. I think that revenue is much more meritorious than funds raised. A lot of times, startup companies want to talk about their fundraising journey instead of their revenue journey. I'm much more interested in the revenue journey because the revenue journey indicates that you're solving problems for customers who are willing to trade value. Now at Minerva, which is one of our flagship products, one of our great partners, there's a specific interest in helping to make sure that underrepresented founders, particularly women, are being, lifted with the tide of funding that is becoming available, as we discussed earlier. We want to create a situation at Minerva where more women and underrepresented founders recognize that there's a place for them to bring their ideas and to flourish. And we're not doing this just because we think it's the right thing to do. We're doing it because we also think it's a profitable thing to do. Providence distributes brilliance equally. And we find that there's plenty of brilliance that goes unrecognized outside of, let's say, the hallowed halls of some of our Ivy League universities. We'd love to see the venture capital community and the investment community in general turn to and pay attention to the opportunities that exist in some places that they may not be looking today.
Well, no doubt it's important, but how do you think the current VC community is doing in that direction?
That's a really good question. There's some excellent data, which I have in front of me, and I'll just pull it up while I cite it for you. We find that today in the market, according to, I think it is Carta, Crunchbase, between Crunchbase and Carta, we find pretty good information that about 3% of the dollars that are invested in the VC world are invested into female-only companies. And about 23% of the dollars that are invested into companies that have female co-founders. So then you might say that means that, 70 some odd percent are invested into companies that are strictly founded by men. In terms of deal count, the numbers are somewhat similar. And, overall, I think there's some question about whether that is the representation that best reflects the opportunities that are available in today's economy, right? Is it well and truly correct that, 70 some odd percent of the opportunities exist in companies that don't have female founders or co-founders? I don't know that that's the best representation of opportunity. I don't know that that's the best covering of the opportunity that's out there. We think there's an opportunity for investors to come together around, the good hygiene of venture capital investing, but adding an extra layer of intention and looking to invest into companies that are representative of the potentials in our economy. We're not exclusive to women at Minerva. I should be clear right now. Currently, we invest about 60% of our deals by count are into companies that are women-led or women-founded or co-founded. So that means about 40% of our deals are not, right? We think that that's probably a more accurate representation of the possibilities that are available in the market today, right? I mean, don't we see that women are the predominant, that college graduates are predominantly women today, right? Don't we see that women are one of the most important determiners of economic health in our society, right? So we think there's an opportunity to take advantage of that and to put some money to work in ways that are not only beneficial, but profitable.
So what role do the investors take in bridging this gap, to financial access, education, mentorship for underrepresented entrepreneurs?
I think as investors, whether you're a venture capital investor or you're a limited partner in a venture capital firm, or you're an angel investor or your friends and family investor, I think the most important thing that we can do is actually have conversations about investing. Because what I'm actually hearing most frequently, particularly from the groups that we're working with today predominantly, is that they don't actually have the access to and conversations about investing. How are investments made? What's the language of investing? What do investors think about? What matters and why does it matter? These are conversations that we can and should be having more broadly in the spirit of bringing capitalism out of the hallowed halls that it might seem to be in and presenting it as a tool of wealth creation for more people in more places. So I would love to have more conversations about how we bring capitalism to work for the benefit of the people, particularly here in the United States. And I think investors can be leading those conversations. I think investors can be facilitating those conversations. I think investors can be sharing what it is that they would like to see their investments do in the world, so that the entrepreneurs of the world can build solutions that are, aligned with the missions and the mission, visions, and values of the investors who, want to join in creating wealth for more people more broadly.
That's a good point. What are the social, financial, and political impacts of early stage investing? It seems like it has a tremendous impact on those things.
Well, clearly the impact of venture capital on the American economy is pronounced, right? You can go back in time to when I was introduced to venture capital in the 1990s, just not because I came from a special background or because I'm particularly well versed in those topics, but because I just happened to be a young man out of the military working in the Bay Area. And the Bay Area was in many ways powered by the venture capital industry, right? The investors of particularly Sand Hill Road in the 80s and 90s made some very, very timely bets that, resulted in companies like Google and Facebook and Amazon. And those are some of the largest companies in the world today. But when those investments were being made, the largest companies in the world at that time were usually manufacturers. So what you might intuit from that then is that venture capitalists changed the nature of the American economy through some well-placed bets early on. And that's what venture capital tries to do, is place bets in an intelligent way early on. That's the whole point of the business. You could say in 2024 that the results are manifest. If you go look at the largest companies in the world today, several of them are venture capital backed. It's not a coincidence, not an accident. So I think then it becomes incumbent upon us as the creators of the future to create a future that we want to live in, create a future that we want to give to our children, right? Don't just go for the buck. Recognize that corporations are the creation of society, right? Corporations are fictions that society has created because we in society think it benefits us to have corporations. So for those of us that found and fund corporations early on, let's remember to turn an eye to society and keep our eye on society and our effect on society, and make sure that the future that we're creating is one that we want to live in.
Well said. So, there are other funds similar to Minerva, diversity plays and so forth, but what's the difference between your fund and other funds in that space?
There are many funds. There are certainly 1,000 or more funds in the United States today, probably several thousand. And it's very difficult to say what sets you apart from your competitors without knowing all of them. What I can say, I think, makes Minerva special and I'm not going to say to the exclusion of others, but I'm going to say to the benefit of those who we're able to share our work with, is that we're not just focused on capital, we're also focused on community and on culture. We act with intention to design a community that is supportive of the members of that community. We ask, for example, from every one of our portfolio companies that they lean in to the leadership of the other companies. We specifically ask that because we think it's important, again, to create a community and to be intentional about the aspects of culture that we're helping to engender from, our little spot on the stage. We want to create something that's not only profitable, not just powerful, but worthwhile. It serves society and that makes the world a better place.
So the VC world's changed quite a bit over the years. What advice would you give to someone entering the VC space today?
Well, it depends on where your goals are in the VC space, right? So if you want to become a general partner in a fund, that's a little bit different than becoming a limited partner or investor in a fund, right? And that's a little bit different than becoming an entrepreneur who accesses the funds that are available in that space, right? So since I think your audience is principally investors, all people who are either investing actively, maybe looking to diversify, I would suggest that you understand what venture capital is, right? And specifically, it's early stage equity investing into companies that you're hoping will turn out to be very profitable, right? Good investments. And understand that it's a very high risk business and that a significant number of your investments can and will trend towards zero. So it's different from real estate in that real estate very rarely trends to zero. And an investment in this class frequently trends to zero. Additionally, recognize that it's a relatively illiquid class. So unlike publicly traded stocks, which can be traded day to day, or even real estate, which can be traded over a time period of a few weeks to a few months, these kinds of equities are typically traded over a very long period, years or a decade or longer. So recognize that there's a liquidity risk, recognize that there's a volatility risk, and when you invest, make sure that you're doing so in a really prudent way. Come into this using a portion of your proceeds, and when you're here, diversify again. Let venture capital be an element of diversification in your portfolio, and then be diversified within your venture capital investment. Right. So
very good.
Yeah, absolutely.
Well, in the last few minutes that we have here today, what else should we cover that we haven't?
Well, that's a really good question. I think the main thing that I would encourage for the listeners on your show, the investors of the world, the people who are part of the creation of wealth, I would really encourage the listeners that you have to go out and talk more about money. Talk more about capitalism. Talk more about how commerce really works in the real world, and bring those conversations to more places. Let them be had at more kitchen tables. Let them be had in more schools. Let them be had in more public spaces, so that we have a broader awareness of the potentials for capitalism in the hands of those who are intending to use those tools for benefit. Let's talk about how to make these tools available to the people of this country so that we can lift one another through cooperation and collaboration.
That's a great message for the VC community. I'm glad you're helping us get that word out today. I think that's an excellent message to put out there. So how best for listeners to get back in touch with you?
For anybody who's interested, you can certainly find us. You can just Google Evolution Accelerator or Evolution Ventures. You'll be able to find us on the web. We'll provide all of our contact information in the show notes for Hall to provide. And we always welcome people to come and share with us what their experiences are. We'd like to know what's going on out in the world, and, we're interested in contributing to, not just a profitable world, but a world we want to live in.
Great. We'll include your contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you very much, Hall. It's an honor to be here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.